So let's stay on news of retailers, but someone who's having quite a good day. Shoprite has reported an increase in market share and record revenue for the year ended 28 June 2020. Their CEO Pieter Engelbrecht joins me now. Thanks so much for your time on SABC News. 6.4% growth in sales for Shoprite and record growth numbers for you during a pandemic.
Yes, I think the whole year was very good for the group. We went into the COVID very strong. To a large degree, COVID has had its negative effect, but we mustn't discount the fact that there was also some positives in the sense that, firstly, we were very fortunate to be an essential service, and secondly is that because of the closure of restaurants and fast food and the whole dining out, we also benefited on that side.
Right, Shoprite has opened over 140 stores in this period. Tell me more about those stores and how that added to the sales of merchandise and your growth as a company generally.
Yes, since about 2003, I said that we were in the race for space, and we opened an enormous amount of stores over that 10, 12 years of very good development. We had Cup in South Africa, and there was a lot of infrastructure development and a lot of shopping centers going up. Lately, that has slightly changed over that. We talk about the race for reach, and that refers more to digital, which was really amplified now by the pressure that we all have faced in terms of going digital and more digital in the COVID period. We were fortunate that we had some project already running in that space. And then we also now talk about the share of stomach, and that sort of plays back to the hospitality trade I was referring to now. So although 147 stores is still a lot, it's about between 2 and 3% of space growth for the group. We had to slow down during the COVID period and could not open stores. We only opened 6 stores in the last quarter, and that is now being accelerated now after we're back to after lockdown. Sorry.
Let's stay on that lockdown issue and tell me more a bit about how it drove growth, particularly when it comes to Checkers, which is said to account for about 39% of sales.
Yes, so what we saw, and maybe firstly, let me just say, we have this multi-format strategy. So we've got Usave, had fantastic growth of 16.5% during COVID period, or for the year actually. Benefited more from COVID because of the transport restrictions and the location of those stores close to home. People could walk to those stores and still find low prices and essential goods. So Usave benefited from that. The Shoprite brand per se was affected a lot by the restrictions on transport because a lot of people actually shop the larger format stores closer to work, etc. And then we had the Checkers and Checkers Hyper that grew at a 13.5% for the year. Excellent growth on the back of the launch of our Extra Savings Rewards program, where we gave customers back almost $1 billion in savings instantly at till point. That definitely has accelerated the growth for the group. But all of the brands have outgrown the market the entire 12 months of the year. As a matter of fact, we've had 16 months of consecutive market share growth.
So outside of South Africa, perhaps not as good a story. Sales are reported to have declined 1.4%. And then, of course, there's the issue of your Nigerian operations, which you're exiting from.
Yeah, non-RSA. As you know, about 18 months or so ago, we started to assess each one of these countries in terms of return on investment. There's unfortunately not a silver bullet that will suit a solution that will suit all of the countries. Therefore, we have to evaluate each and every one of them. Therefore, as in the presentation today, we also said that we had advanced negotiations in terms of the disposal of Nigeria. We will let the market know as that progresses, and that we expect to be out of Kenya by the end of the year. A lot of this has been actually exacerbated by the whole COVID scenario. You can understand, and you would know the complexities that we dealt with in the RSA market in terms of COVID, but we as Shoprite had to contend with 14 different countries at different stages of lockdown and rules. So a lot other things have impacted the non-RSA operations, none less than the supply chain where one couldn't cross borders. It was difficult to get stock out to countries, so completely different scenario. Overall, important maybe that's a standout for the non-RSA, although it still made a small loss, that segment. 11 out of our 13 countries reported still a positive growth in constant currencies. That's meaning excluding exchange rate differences.
Yeah, I wish we could spend more time speaking about, the differences in trading across different countries on our continent, but I think our time is almost wrapped up. So I want to look at the mobile money accounts that Shoprite is looking at to also drive growth, adding more banking and kind of digital capacity in that offering.
Absolutely, very exciting development. What I always had call it a dream, so to speak, to bring free banking to the people, and this is our first e-wallet account where we want to put people in complete control of their own money. And we will, for example, not allow debit orders on that account. You will determine who you will pay or not pay. As we know that a lot of things has happened in this space about before people know it, there's no money left in their bank account and they might want to reprioritize it. Just something short to mention, there's going to be a whole host of services that's going to be added to this. I'm really looking forward to that. We just launched it about 3 weeks ago.
CEO of Shoprite.
Survive in the
Me on the line there. Thanks so much for your time on SABC News this afternoon.